Eric Muathe at Muathe.com. Now let's take a look at the MACDs. Now here what I've done is I've removed the RSI. So we're going to take a look at the MACDs, and from a different view. What we are looking for here is uniform MACD action, or we can say symmetric MACD action. We can also say that it is symmetric action that we are looking for. Again, uniform action or symmetric action, and we're going to use the MACD, and we are using the zero line. So we want to see what happens when we move above or below the zero line and show uniform action. Now keep in mind, this is again the same chart as the previous weekly chart. It is 3 years worth of weekly data. It could be for any stock, any instrument, anywhere in the world. Let's take a look at uniform action. All right, let's begin with this here. Now remember, this is too simple, so we have to always consider that we have to consider other time frames, other aspects, market conditions. This is just keeping it simple, trying to break down a chart by looking at one aspect of trading and then another, so it might look oversimplified. That's the point, is when you combine this with other factors, it can help paint a picture and help you determine what to do. Here we have uniform activity below zero, back above it. So once it moves back above the zero line, confirming uniform activity, it gives you this entry, and you had a slight move higher. You come back, this is uniform activity below zero, back again, and that gave you another re-entry here, which is this period. And here we have now what ends up being a bigger move higher. We can actually even see that on the reverse of this, around the same time period here, we go above zero and then back below it with uniform action. So once we move below the zero line, that's a sell signal here, which led to this drop. In other words, you always want to be on the side of uniform activity. Here we can see uniform activity rejection, which is coinciding with the highs here, and of course we drop after that. Here we have perfect uniform activity below zero, no, above zero, back below it. So above zero, back below it for the highs here, which coincides with these highs. This is uniform activity, whichever way you want to slice, dice it. Once you move back below the zero line after confirming uniform activity above zero, back below it, it is for this drop here, and you go on to record fresh lows. So let me just draw that zero line. Somewhere there is a zero line of the MACD. We have a little bit of a change. We have uniform activity now. On the flip side, uniform activity below zero, back above it. That was good enough for the instrument to give this entry, and you had some swing trade to the upside. It changes again and gives you another uniform activity rejection. So very confusing period here. Uniform activity above zero, back below it. Once you move below that zero line, confirming uniform activity, it is somewhere around here, I believe, and you drop again. So those are instances where we see uniform activity. Now if you are combining this with other aspects, then you had a chance of trading the correct direction. Now here we have uniform activity support for the lows right there. So that's the main MACD. We have uniform activity rejection here for the highs here. So once you move back below the zero line, which is corresponding with this movement, you could see that it was poised to go lower. So we've taken a very complex subject of the MACD and just looked for uniform action, and you can see that it gives you periods in the stock that help you lean either long or short, and just based on that simple analysis, you can see that it helps gauge which way things are moving by understanding the power of symmetrical action and uniform action around indicators. Here we're looking at the MACD. Eric Muathe, Muathe.com. As always, good luck, peace, and blessings. E-A-C-S.